All right, here we go. Please subscribe to the channel. Please.
Hey guys, YouTube's got an algorithm and it really help us out a lot if you could like, comment, and subscribe. This is how we can get more information out to more people and share the message of Toronto real estate.
In
Thanks.
that order, like, comment, subscribe, and hit the damn bell.
And I've seen pictures from you when you were 20, so you actually kind of look like
I did resemble how, well, at least the hair. Anyways, so it's the Toronto Real Estate Show. Hello, TK.
Welcome.
The-
Or
Welcome back.
nice to have me.
Nice to have you, and nice to have you back. I don't know how
What's
if
up?
it's nice to have you, but it's
Nice
nice to have you here.
Because I know I almost backed out today.
You have a busy day today, do you?
I almost backed out.
A lot of showings, do
I
you?
had a lot going on this afternoon. I almost bailed.
Yeah, me
Had to
too.
shine my rims on the car and vacuum my seats,
I'm upset.
clean the bird crap off my rooftop. You know, it's an ordinary Sunday, so I had almost packed it in today for the show, but I'm here, thankfully.
I think everybody appreciates that. Hey, Jordan's here.
Awesome.
Nice. Look at that. Professional, keeps his appointments. I love it. No reminder, nothing. We are definitely falling behind on this show. Like things are not getting better around here.
Who's the booking manager?
Things are
Hey,
not getting
he needs to
better.
be, yeah,
They're getting worse
he needs to be on
daily.
top of ensuring that everybody's got the memo.
Listen, this was all fine and dandy and fun when everything was on lockdown and I had nothing to do, but now everything's busy for me again. This is a pain in the
Yeah.
ass.
Yeah.
Yeah, Jordan Scrinko in the house. You're on mute, brother.
Welcome.
Welcome though. Hello, good morning.
Hey, how you guys doing?
Awesome.
We are doing great.
Thanks for showing up.
Yes.
Yeah, happy reopening weekend here.
Yes, happy reopening weekend. We were our booking agent, who has since been fired,
Okay.
didn't reach out to you this week to confirm. So we just realized very shortly, or like 5 minutes ago, that Jordan's supposed to be on the show today. I wonder if he's
He's in the calendar, yeah.
because
So we're glad you showed up because
I know the booking manager personally, and I know
Yeah.
he did not reach out to you. So we do apologize for our unorganized behavior.
we're organized. We're here. Jordan's here. He's loving it.
if it's in the calendar, I'm there. I'm
Yeah,
there, man.
that's what I told
Awesome.
TK. I said he accepted the invite. He's gonna be here. He's a real
right.
Yeah,
professional.
unlike my clients, if I accept the invite, I'll show.
Yes, let's talk about that for a second, shall we? Because yeah, go for it.
Do you have the Instagram account, The Broke Agent?
Of course,
I'm not a
absolutely.
big social media guy in Instagram, so to me that's like more of a new thing. But yeah, those posts are hilarious. Is he an American guy? It's
I believe Broke Agent is. Yeah, I think he's American. So's there's another one. I think it's Actually Agents.
okay.
There was a good one the other day. It was like residential broker starter pack, and it was like Range Rover lease and like what else? What else is there? A couple other things. Cracked me up.
Perfect. Little boot covers. You need little boot covers. Make sure you can go inside houses, right? Little notepad and calendars. You got to give out those calendars.
People still give out calendars?
Somebody's giving
Some
out
people do.
calendars.
People do.
Like magnets?
Yeah.
No.
Everything, you name it.
I am seeing firsthand how archaic this system really is. Like, I already thought I knew how archaic real estate sales were. It is so bad. It is so behind what it could be. It's crazy.
I'm going to do a quick little intro for Jordan just
Yeah,
because
go for
some
it.
of the listeners haven't maybe seen previous episodes. Jordan's our pre-con expert, so he specializes in the pre-construction industry in Toronto. If there's a project that is planning to be built, is going to be built, is on its way to being built, or has just been built, he knows about it. and we're looking to him for all the advice we can in the Toronto GTA area.
Yes.
So, what are you seeing, Jordan?
What's going on out there?
Weird. It's
Yes,
all over the
weird.
place, really. That's the best way to describe the last year is just the ebb and flow and the change in month by month, not just of the numbers and the data, but just the product type that people are looking for, the neighborhoods and the areas that they're looking for, and just like for us, just a weird a strange shift to end users buying pre-construction more than investors in the past year, which is an anomaly for sure.
Let's talk about that for a sec. That's interesting. So we have, okay, so you're saying that we have more end users. Are they buying bigger units? Are they buying like 2s and 3s?
Yeah, larger units.
Well,
Larger units, more expensive units, and more focused on the boutique sort of luxury product. I mean, we saw one Delisle launch, and it did incredibly well,
yeah.
given the price point. Given, I mean, obviously, it's something of an architectural marvel, and it's in a really good location. And it's like we haven't had a product like that in a long time. And I don't know if you guys have visited the sales office, but my God, the finishes in that building, they haven't cut any corners. It's just an incredible all-around build. And
How
so it
much
makes
per
sense
square
to
foot there?
These like the sky units are approaching 2,000 a foot type of thing.
That's
It's out
it?
there.
That's it?
Oh,
That's not
what's
even
the
that
highest? Is that one of
high.
the
That's
highest
not
for
that
something like a
high.
tall building?
50
No,
Scholar
you
is way higher than that. 50 Scholar, isn't that like near 3,000?
Yeah, different location, right?
Sure.
Yeah, and I mean, if you look at like resale, I mean, Hill and Dale is a prime example on Roxborough. It's like those units sell resale north of 2,000 a foot, and they're very similar in fit and finish to one Delisle. So it's really not all that expensive. Of course, to our investor clients, when we send out emails with price lists that look like that, people laugh at us and they think, right, because they're used to looking at entry level resale, which is a whole different, whole different world.
What's
But
the
yeah,
How do the
it's
rents work on a building like that? Do they work at all?
it depends, man. So it depends on how much product actually comes to when, like how the question is how many investors actually bought there and intend to rent those units out, or people who
Right.
bought them for maybe retirement, so they're going to rent them out for 5 years before they move in. Like the question is how much of that demographic is in that building, because if there's very few available for rent, they'll actually probably cash flow, believe it or not. I know if you look at Hill and Dale, there were 2 units that leased right on closing of that building, and they leased at like $6.25 a foot a month, which is
Whoa.
maybe the highest rent I've ever seen in the city. So it's like,
Whoa.
I have clients who reach out to me for those $10,000-$12,000 a month rentals, and like there's none of them available. I mean, Peter Freed's unit over at 550 Wellington rented for what, 25 a month, 25,000 a month.
Wow.
Wow.
It's like, what is it, like 6,000 internal and 6,000 terrace? Like it's an incredible unit, but there are people looking to rent those units. It's tough to
Is
believe.
is there a way when you're helping your clients to go and find out, how many investors are buying in a project? Like, is there any telltale signs that you kind of just learn from experience, or?
Well, telltale signs, yeah. I mean, just you look at the type of product and you can make a pretty fair estimate based on that. If the building is high, per square foot because they're focusing on micro units and a lot of really small units, and the 2 bedrooms or 600 square feet type of thing, you can be sure there's going to be a lot of investors in there because they're trying to pull down their end price to make it more attractive to your investor. And then just location obviously is a big factor, and just what our response is. So I mean, you can ask, depending on how close you are with with whatever marketing or sales team is running sales, you can ask them for what they're seeing, and then also just what we're seeing with our. If we have 20 worksheets, I can tell you, 10 of them are investors, 10 are end users. I can kind of guess at the composition, but that's the best you have, really.
Mm-hmm.
And
Because
so
that's a strategy, right? In a real end user type of building, maybe take a chance there to get a little bit higher rent, right?
Yeah, especially if the clients who are looking for assignment flips, ideally you want to be in a building where there's not going to be 30 assignments available during interim occupancy, because that's a tough spot to be in. It's sort of a race to the bottom.
and so you said that it's more locals buying for themselves pre-construction. So What are these people saying? Why the shift? Why are they wanting to wait 5 years for their home now?
Well, so for us, the end user demographic has been a lot of downsizers, empty nesters, and even people who are buying these condos, kind of a 50-50. They have the cash, they want to deploy the money. A lot of these people are relatively wealthy and they see, they're worried about inflation and they want their money in assets, and real estate is good for them because, hey, maybe I have a couple of kids who might want the condo. Maybe I want to downsize into the condo. I don't know, but it's 5 years away and it's a good place to park my money in the interim. Obviously, it's when you're dealing with $1 to $3 million condos, each person there's usually a very different motivation. But that's sort of the overwhelming one. Is it's a lot of people looking for somewhere to put their money that's relatively safe, and they might use it, they might not. They're not sure, but they'd like to have the option. And with resale, obviously, you need to figure out what you want to do with it today. And so, I mean, it just lines up really well for a lot of these people.
So that's a new buying pattern that you're seeing, right? Like that's kind of like something now that maybe wasn't as common 2 years ago, right?
Yeah.
Most people that had a use for it.
Yeah, I mean, it's all, you normally see boutique luxury buildings hold on to a lot of inventory for quite some time. It takes them a lot longer to sell. The sales cycle is just a lot longer. And lately, those units are selling quite quickly. The large stuff, the terrace units especially, they're selling really, really well. Yeah, so it's kind of an interesting shift.
And so what about location? Has that shifted at all, or is it still just downtown core that you're working in?
No, we've been all over the place for the last year. There's a lot of sort of lingering inventory opportunity. There's a lot of buildings that are almost complete, and because they don't have to factor in the new cost of construction, their prices are looking really attractive comparative to new launches. But most of those sort of lingering value ops are in the outskirts, west and east end, and even further out in Mississauga and that kind of thing. So we've been kind of all over the place. There's also been a ton of interest. People really want to buy pre-construction in, I mean, Hamilton's a huge one. Hamilton, Waterloo, Waterdown. Any pre-construction launching there is selling like hotcakes. Barrie included in that. I mean, people are paying the same price per foot in Hamilton and Barrie as some of the options in Etobicoke these days.
What are those buyers? What are the buyers that you're dealing with? Are those end users or investors?
Investors.
Okay, so the price point is the attractive part, right?
So the investors are moving further out?
A lot of them. I think a lot of them are. Just end price is better for them. It's lower. It's more manageable. And a lot of people get caught up. I think a lot of people get caught up in the headlines, frankly. And the headlines are, work from home is here to stay. Hamilton's up 40% this year. And all of that kind of plays into people's decision. Maybe I should buy a condo in Hamilton rather than Toronto. But I think when you look at the value, to me, it's like, if you can buy a condo for a pre-construction condo for $900 a foot in Etobicoke on transit versus $800 a foot in Hamilton, I mean, to me, over the next 10 years, what's going to outperform? I think it's pretty clear that Etobicoke will outperform. Like, the value gap is too narrow right now. Like, I want to pay 20 or 25% less to be in Hamilton than Etobicoke, but right now you're just not getting that kind of discount. So to me,
which is uncommon. That's generally speaking, the gap is going to be a lot larger. Just over the last year, it's narrowed down, and that's not something that's going to stay forever.
What about the rent gap between the two?
The rent gap?
Yeah.
Well, it used to be better, right? It used to be easier to cash flow in Hamilton and Barrie and places like that because maybe prices were 25% lower, but rents were only 15% lower. And as someone who's lived in Barrie, I can tell you Barrie's a sort of a unique market because there is no rental inventory. It's actually incredibly difficult to find anything to rent in Barrie. There's very few purpose-built. There's very few investors. Being a renter in Barrie is particularly difficult. But lately, with these inflated pre-construction prices in these outskirts markets, I'm not sure what the cash flows are going to look like. It'll be interesting to see, especially when you know, a lot of these buildings that sell out, you know, get 2,000-3,000 worksheets overnight. When they close and 90 or 80% of those people might be investors, it'll be really interesting to see. I mean, when all of those units come to market at the same time, it's a race to the bottom, right?
How many did you say?
surprised
What
me,
percentage?
Let's
if
say
80 or
80.
90% are
80 or
investors, you said.
90. He did say that, right?
Potentially, yeah. But what
Yeah.
surprised me, I'm driving along the 407, and in Oshawa, they've got this massive condo that's 40 stories or whatever, and that they're trying to sell another building, or it's already for sale, or they've got plans for it already. And it's like, you know, it's near the college and university and everything like that, but it's just in the middle of nowhere. So I think that these small towns or outskirts cities have now just had changes to their planning, which they're allowing now bigger buildings to come in and more density and stuff like that too. Because I feel like, I don't know Hamilton, I don't know, you know, Barrie, wherever these buildings are, but I feel like there's no other buildings like these
It's the
that
GO
exist today.
stations. It's the GO stations. Every time a GO station goes somewhere, the densities get bigger and higher, right? And then people can come there. I mean, that's been the strategy. If you look at all of these outskirts cities, all of the booming ones with height and all these mid rises, well, maybe not 100% all, but I think probably have a GO station that either just opened or opened in the last like 10 years.
Yeah, Bowmanville's got a GO station that's coming up.
Everything.
And
Hamilton,
I saw the rendering. I'm like, that doesn't look like it's in Bowmanville, but
Oshawa, Richmond Hill,
yeah.
like it's bananas everywhere.
So that's probably
Barrie
a
has one,
factor
right?
too.
Yeah.
Then the GO stations. That's why these are now buildings that are even allowed to be built.
That's 100% what's going on. And the builders are, look, what are they starting at in all these places? Like you see starting in the 4s everywhere, no matter what, right? So what size is that unit?
Well, definitely the margins are, it's no secret, the margins are better the second you get out of Toronto for developers, right? That's pretty well known. You watch any conference or you attend any event where developers are speaking and they talk about that, and it's much easier to build out there. The city planning is a lot easier to work with. And the margins are way better because just the cost per buildable foot that you're paying on these sites is usually better. I think maybe in the last year that might have shifted a bit. It might not be as great anymore. But yeah, I mean, it makes a lot of sense from a developer's standpoint why you would want to build in Burlington over Toronto if you can get, you know, 10% or 20% lower cost per foot, but it's costing you 30% less to build. I mean, it makes a lot of sense, right? And there's a lot of people looking for that inventory. It's not like, you know, I say 80 or 90% investors, but the truth is a lot of the people who I would classify as investors might also just be I don't know what I want to do with it type of people. Like maybe I'm buying this for my kid. If they decide they want to stay, you know, in their hometown or go to school here, I'm not really sure. If they don't do that, I'll rent it out. It's a lot of I find like especially like Vaughn's a good you know, case in point is a lot of those people buying the VMC sort of pre-construction units. A lot of them are people who live in Vaughan. You know, their houses are worth 1.5 and they've got all this equity in it and they're not sure what to do with it. They understand Vaughan, they get Vaughan, and so they invest. You know, a lot of people like to invest where they know. And so you see a ton of that in Vaughan, and Square One's another good example of that. So it could be for their kids, it might not be, they're not sure. But they want to deploy capital in the property market. They want to lever up a little bit, and it makes sense for them to invest close to home.
Nice. One of the things that I've been seeing lately, and Darryl and I are familiar with a few of them, is failed projects. So guys that have been, you know, selling or marketing or something, and now like one just came back on the market on Shepherd, which is the Harrington residences. There's some other ones that we know about. What are you seeing?
There has to be some coming down the pipe too. Like it's impossible that there wouldn't be.
There's a few sites that are stalled that we're like, this is going to be coming up soon as a failed site. Like we're watching.
Yeah. I agree with that. Like I said in a video early last year when the cost of construction started to inflate rapidly, I said we're going to see more cancellations than usual. It only makes sense if they haven't broken ground, if they haven't, you know, if they're not moving forward on the development, if they sold at prices that were previously able, you know, possible to honor, and that margin disappears and they get their construction financing pulled. I mean, most of these guys don't have any choice but to cancel. And Nobody could have really anticipated what happened with the cost of materials. Nobody built that into their pro forma if they ran the numbers pre-COVID, and they sold at prices that maybe they can't honor anymore. And so there's going to be a lot of cancellations naturally. We had actually a few clients at Harrington residences because when they did sell, they were at incredible prices. We did warn our clients there. We said, look, I would put this project at, a decent odds of cancellation.
Why? What was the criteria that you were looking at?
I can't remember if they didn't have zoning. There was
No zoning.
There was a red flag. I believe it was that. And
Did you see Did you see the one on the Queensway? Was that you posted that? Somebody posted it on Twitter. Was that you?
So 859 West. They had started selling 2 floors that I guess they didn't have approval on, or they're waiting on approval on, and they were pretty certain they were going to get it, but it didn't come in time.
Their investors that lent them the money must have been thrilled when that happened.
Yeah, so I mean, that's also...
Don't worry, we're going to get at least 2 more stories. Don't worry.
I had a few clients there on lower floors, thank God. And I actually, one of my clients 2 years ago when he was buying that unit was asked about the higher floor units and really wanted one of the top 2 floors. And I told him not to do it. I was like, at least with these lower floors, it's almost a sure thing. They've already broken ground. They're almost done underground.
Oh, why was it known that those 2 floors were in the application for?
If you did your digging, yeah. It was there clear as day in the city applications.
But they didn't tell people. They just sold the units.
I don't know. I mean, I wasn't told. But I don't even believe the sales reps would know that. I mean, it's not even really their job to know that.
Yeah.
Right. And I mean, whole buildings are sold without full approval a lot of the time. So just 2 floors seems like such a minute detail, and it seems like a relatively easy thing to get in the Queensway where people are getting massive zoning densities. Not massive, but yeah, they're But when I looked at when I pulled the application from the city planning database, I was looking at the density, and I can't remember what the number is, but I was looking at other projects that had recently approved, and I was like, if they get the approval for the additional 2 stories, it looks to me like they would be the highest density in that particular pocket. So it didn't make a lot of sense to me. I wasn't sure if they would get it or not, so I just told my client, just to be safe, why risk it when there are units on lower floors that are, probably a sure thing, or as close to a sure thing as you can get.
And they listened?
They did listen.
Oh, yeah. Good.
He knows his stuff. They trust him.
That doesn't mean that they listened.
So how many sites though, like without zoning, like to me, like Darryl, I asked Darryl this, and again, I'm super green here. To me, without your zoning and you're going to sell, right? I wouldn't want to be buying that unit. Is that common though? Are bigger developers doing that where you trust them, where you're like, we know this guy, he's done it before, and we think that he's going to come through? And like, how do you gauge?
Like up in Vaughan, Gupta.
Yeah, I mean, it happens, man. Like there's a lot of it happens pretty frequently. Okay. It depends on how far along they are, right?
And wasn't it Liberty up there too?
Yeah.
They're huge. No agent in their right mind would have told their client to worry about Liberty going under. And this all happened, guys, before the prices of everything went bananas. Yeah. So imagine what's coming.
Yeah, it happened. Crestford is a great example. Nobody ever told anyone to worry about Crestford.
I swear to God, when I was telling people, I'm not kidding. They were paying $200, $250, $280 a buildable for zone sites way before zone sites were anywhere close to worth that. They paid so much for that Yorkville site. It was nuts. They had a Ponzi scheme going where they were just buying zone sites from KingSet and selling them right away and building them fast while the market was hot. And the minute the market stopped, they were done because he just kept bringing in money from God knows where, saying it was his own, right? And the deck of cards just fell apart on him. The minute the market sentiment shift, boom, that thing just fell apart. You could see it if you knew about the land deals, maybe. I mean, I wasn't like going, oh my God, like run for the hills, something's going to happen. I just said to my partner, like, that's really high. This is stupid what they're doing.
Yeah, I mean, we hadn't sold Crestford product, so I wasn't paying really close attention to any of it. We definitely lately do more due diligence than we even did before. But there's only so much you can do. Like people you, you can't even assign an odds to it because there's really no way to know. It's just you have sort of projects that are closer to a sure thing and projects that aren't, right? Um, yeah, I mean, it's the best you can really do right now. Like Harrington's a good example of a small developer, small project.
Who's the
Um,
developer there?
I can't remember. I
Hmm.
can't remember.
Smart.
Um, yeah, with someone on my team sold like three or four there. But yeah, no, it's definitely strange times. Anything that launched recently, I think, is fine because they've priced it in, or at least I hope they have. Right? They've based their numbers on super inflated costs of everything, and if those costs regress a bit, then their margins are looking a little bit better, and they should be all right. But time will tell.
So
Yeah.
what's the new stuff coming out at right now per square foot for like something reasonable, not the micro unit that's 385 square feet
It depends on where you are, right? Like
downtown, like core,
so downtown, 1400, 1450.
and that's got built in the new construction cost bump.
Yeah,
Hmm.
yeah, and then you've got. I mean, it depends on where you are, right?
Yeah,
Like
that works.
Vancouver just launched their new phase at Notting Hill, or the new suite release at Notting Hill. The really small stuff's at like 1,300 a foot. The larger stuff's at closer to 1,000. So that's Etobicoke. Um,
Do you
yeah.
guys sell
So
anything at the United building at 481 University?
no,
Is that site moving forward or what? You know?
I don't, I don't know.
Another
Which
one is
one's
Trinity
United?
Ravine Towers on Markham Road.
No, we didn't sell that either. I only pay really close attention to something we sold a lot of units at, or
Yeah,
at least most units at. There's just so much going on in the city. I feel like it would be a full-time job just for me
that's okay.
uh, to browse urban Toronto all day and keep up to date on what's
Those are just
happening.
two sites I think that are going south. That's why I wanted to see. I was trying to
Uh,
think of all the ones that were sold pre-COVID times and nothing's been happening and they're just on standstills, right? Like nothing, the ground hasn't been broken. And see, to me, like the deposits, right? Like, so for me, to advise the client and say, yes, go into a pre-construction condo, right? Get your deposit tied up, whatever that number is, 100 grand, 200 grand, whatever size unit you bought. And then 3, 4, 5 years later, you get your deposit back with like 2% interest or whatever it is, if you're lucky, and it's like, all right, start from the beginning again, and now prices have gone up however much, right? Like
Well,
that's,
especially the last couple of years, like the
yeah.
prices
So
have
how do you
just
set that up with
run up.
clients? Like what do you do? What's your strategy to just try to mitigate the risks and make sure your clients are aware? And
Show them
obviously you're
that
successful,
long-term
so what is it
chart.
that you're doing? What?
well, we were lucky. Like we haven't dealt with any big cancellations. We've never sold like 10, 15 units at any of these projects that canceled. But I mean, we when we sit down with clients and we have our consult, like it's not just a lot of brokers book you like you sign up on their website or you refer to them or whatever, and they book you immediately to go meet them at the sales office. We do it a little bit differently. We have people come into our office first, and we sit down, and it's usually a 45-hour long presentation where we go through multiple slides about pre-construction investing in general, past returns, that kind of thing, what their closing costs are going to look like, all that kind of thing, risks to be aware of. And the biggest one is just I tell people, buy into a developer before a development. Focus kind of on who you're buying from and try to measure your risk reward based on that. Oftentimes, if the prices are too good to be true, they are. And I'd rather overpay a little bit to be with someone a lot safer.
When was the
Try
last
out.
time prices were too good to be true?
It's a really good question. A long time, I would say. I mean, there are examples of smaller developments launching cheaper than the kind of big guy next door. That's not necessarily a red flag in and of itself. Maybe they just can't command the premium or the product's a little bit different. But over the last year, I'd say like anything that's launched recently, you don't really look at the price list and go, this is too cheap. I mean, Daniel's Keelsdale is really quite attractive, especially with the 5% down and the starting prices. But
Where's
Yeah, I
that?
mean, to Kilsdale Daniels, the one they just launched.
Where is that?
And then there's like uh, there's some units at a prime example of too good to be true, but is true is like there's some units right now at, do you know Cypress, Pinnacle, Kipling and Dundas?
Okay.
So, anyways, there's a Pinnacle project at Kipling and Dundas
You're a
where
pre-con expert, Jordan, so tell us.
okay, so there's a Pinnacle project at Kipling and Dundas. It's almost done. Occupancy's in like it's like 6 months.
Yeah.
But you can buy a really good floor plan, U-shaped kitchen, 1+den or 2 bedrooms for $850 a foot, parking included.
Sounds like a great deal.
Scarborough
Yeah.
prices.
Scarborough
Sorry?
prices.
Scarborough prices right there. That's amazing. Kipling and Dundas, you know,
And
subway access,
the
everything.
downside is like very few investors are looking for something that they're going to have to close on in 6 to 12 months.
Yeah.
Right. Yeah, it's kind of interesting. Like the lingering inventory of projects that are almost complete, there's some unbelievable prices.
But people would rather wait 5 years and just kind of reserve their price now.
Yeah.
Wow. Instead of buying, okay, I guess if they're.
Yeah, that's probably the number one attraction of pre-construction, right? Is all I got to do is do the deposit schedule, and then I don't have to do anything else until then, and I'll worry about it then when that time comes.
But there
and
are
hopefully the builder delays it another year or two.
But there aren't people that are like fed up with trying to buy a house in the market that aren't eating those units up now?
There are.
Yeah, okay.
It's always kind of interesting to me that when a building gets that close to completion and prices are that good, it can almost be really hard to sell an investor on the product, even though the numbers make so much sense. Like I can show people, you know, if you buy at Pinnacle Cypress versus another project in Etobicoke that's more recently launched, you're talking about an $80,000 saving on a very comparable unit. And a lot of the time people's response will be, yeah, but the rental market's bad right now. It's like, okay, so you stuck up 10 grand in rental losses over the next 2 years, but you saved yourself $80,000 on the price. Does that not make a lot of sense? But a lot of the time to people, they're not ready to close. They don't want to close. Maybe they can't close. And they think they'll be in a better position in 4 or 5 years or whatever the case is. Maybe they want to assignment flip or they want the option to assignment flip. But, you know, a lot of the time the numbers themselves don't do the selling. Because to me, you look at something like Cypress and that's an incredible deal. Or, you know, Mirabella at Lakeshore and Windermere has some units left at $900 a square foot. And there are examples of partial Lakeview units selling in that Humber Bay pocket at Eau de Soleil for north of $1,300 a foot. So that's an incredible deal. But again, you have to close next year. Southport Square is about to launch. I don't know where they're going to launch price-wise, but I'm sure it's going to be north of $900 a foot, right? And so that makes Mirabella comparatively a really good deal. But again, the downside is you have to close right now. And just, I would say a big subset of pre-construction investors are not interested in closing soon.
And a lot of the end users want to close right away because they want to move in right away.
Exactly.
So you're in the middle.
Exactly.
Yeah. And so do we have a lot more launches lately than we did over the last year? Or do we see a lot more coming down the pipe or less? What's the story?
There's a lot more coming down the pipe. Some launches that have kind of come out of nowhere, blindsided us, like Casimir on the Queensway. Yeah, I mean, I think a lot of developers, they have all this inventory they intended to launch, and COVID sort of delayed that. So I think over the next year, provided the market stays relatively strong and these guys can move 50, 60, 70% of their inventory on launch, I think you're going to keep seeing that inventory come to market.
There was an article this week. Millions of people will move to Canada in the next 20 years, but where will they live? It's on the CTV News website, right? And it's quoting Statistics Canada saying by 2043, our population under a medium growth scenario will be 46.5 million. So that's about 18.5 million more than we've got right now. And the increase in Ontario is about close to 10%. And I think that with all these projects being canceled and delays, and we're going to have a serious shortage of supply in about 4 or 5 years when we just haven't been able to keep up with new building and new unit construction in the GTA.
What do we consider the current situation if 5 years from now is going to be serious?
Yeah, I was just going to say that I would argue today is a serious
It
supply
is a
deficit.
serious friggin' deficit out there right
But
now.
people still have places to live. Like what this is showing is this is saying like where are people going to go? I mean, people are going to be forced to leave Ontario.
I mean, definitely, like our
Yeah.
building, somebody put out a good tweet. I think it was the Planning Nerd Twitter who said, in the last 10 years, in the last 5 years, we built less housing than the 5 years prior to that, but our population growth was like 30% more than the 5 years prior, or something like that. And I think you can kind of extrapolate that trend and assume it's probably going to continue forward, where each year it's getting harder and harder to bring units to actual completion. And each year our population growth is edging up a little bit. Toronto's sort of an anomaly in that way. Like that's been the overwhelming story for the last decade or two about why our prices, why our housing market outperforms every other North American market. It really does all come down to supply and demand. Like people can scream in the wind all they want about foreign investment and all this other stuff, but the major case is just the supply and demand, and I don't think it's going to get any better.
No, and here, check this out. Check this out.
Condos, though.
No, but it's not, because here,
why not?
The reality is that even if all the developers got approved today for what they applied for, right? We have an article, skilled trade shortage could undermine home construction in Ontario. Who the fuck wants to swing a hammer anymore? Most people don't want to do the work, and we're already short in labor, we're short in materials, we're short in land, we're short in current units, and we're planning on opening the floodgates up in immigration. So what will definitely happen is people will have to spread out because there isn't enough here in Ontario, zero doubt. But guess what? There isn't enough anywhere, because if we can't keep up with our 125 cranes in the air right now, like what the fuck is Montreal going to do, right? What's Calgary going to do? What are these?
Alberta doesn't have the same labor shortage for skilled trades, right? Because their economy is a little bit different.
Different
and all the
skills, but yeah.
People have to be repurposed for building, right?
Yeah, well, there's only so many people that actually want the Canadian dream and Calgary.
18.5 million people come. I'm sure some of them will know how to use a DeWalt drill, right?
Absolutely. Or tell people how to.
In the GTA, where are we going to build? Where are we going to build houses? Where are we going to... There's really nowhere for us to go. And like, there's going to be people fighting tooth and nail to keep the green belt. The solution's condos. It just got to be just towers. Hong Kong, just...
Yeah, but nobody can build them. And here, check this out.
Right along the lakeshore.
To compound the issue, there was an article that came out this week, the soon-to-be end of Katerra. Anybody know what Katerra is? Katerra was SoftBank. You know SoftBank, the company that backed WeWork? So this was a SoftBank-funded company that was automating home building, right? Like factory building homes. Well, they're gone. Right. And they were backed by SoftBank. They had billions and billions and billions of dollars in funding. So even the real solution, which is automation and robots and like crazy construction methods, like they're failing on top of everything. Right. So like it's going to be dire.
One of our guests, Jordan, named Ben Myers, he's an architect, and he has a lot of different, experiences and stuff like that. And apparently in Asia they have some amazing, especially like we witnessed that, right, when China built the hospitals in Wuhan. It was just like all of a sudden they have all these buildings within like weeks or months or whatever it was, right? So they've got
some of them fall apart. Possibly. For sure.
They may have been built to fall apart.
No, they call them something. I forget what they call them, but they know, like they're like paper buildings or something is the translation.
Sure. But I'm just as an example how they were able to do it so fast.
Not all.
They do build their condos though with a lot of automation and a lot of engineering that is just, I guess, next level that we just don't have yet. And I think that's a big part of the solution. Darryl, you're right. I mean, automation is the only way to avoid that, and that's what a lot of all the companies right now, because of the job vacancy rate, it's up about 20%. All the companies right now are looking for ways because they're like, I can't find a skilled guy. So instead of me investing in training and instead of me investing in paying people more, why don't I try to invest in more automation so that whatever it is that my company needs to be doing, the less skilled workers I'm going to have. And there's a huge amount of automation being invested in over the last 12 months because of the labor shortage.
Huge.
So we're just at the beginning of it. It takes time to do this, especially building a condo. I don't even know how that would work, but they're doing it.
But let's look out 5 years. I mean, Is there any indication anywhere that says supply will catch up to demand or demand will shrink?
No.
Like even a pandemic didn't shrink the demand.
Yeah, I mean, there's only conjecture, right? Like, there's a lot of conjecture about millennials leaving Canada because housing costs and are too high, and you know they can get better in the States or whatever. But I'm not actually seeing those people. Like I think they're a relatively small subset of the population who actually want to pack up and leave. And I think like another point of conjecture is like with Biden's immigration plans, it's going to take a lot of the immigration that would have otherwise came to Canada, but I think those people are vastly underestimating how many people in general there are that want to move to either Canada or the U.S. I think there's not a shortage of those individuals.
Or anywhere other than where they are right now. Like they have options.
Yeah. Yeah. So I think like the way I see it is I just don't see don't see a way out of the supply deficit. Not in the short term. Definitely not in the short term. Everything takes time, and like you said, like bringing automation into condo development, having that help with the labor shortage, like that's a medium to long term fix, right? Like that takes a long time to implement those kinds of things, and even just just in general, working with the city of Toronto and getting anything approved is so slow and painful. I can imagine how long it'll take to get approval to use certain
robots.
Oh yeah, no, it's crazy.
You're like, wait a second, hold on, you're gonna need a permit for that robot stopping traffic. Sorry.
No, but like, let's take Tesla as an example. Like, when did they start that company?
I don't know.
2003 or I don't know. Let's say well over a decade ago, probably 2 decades ago. And like adoption of those cars is really starting to gain traction over just the last couple of years. And all that other time was just failure and investment and, scraping by and a whole bunch of baloney, right? So like somebody has to do that with construction at some point. Somebody's going to have to like Katera just failed. They're going to go out of business. Somebody's going to come. Like we have to go through that whole process.
Buy up their scraps. Yep.
Well, whatever. Yeah. But like somebody has to come in with a plan that works now.
Yep.
Right. And get somebody to buy into it. And there has to be a reason to do it. So, the word on the street is that modular building will save time and save money. But the reality is that even the guys that sell it tell you, it's really not that big a gap. And then, depending on if this happens, it might even be more expensive. So
yeah, that's what Ben was saying.
Right? That's
there's
where
things that can go wrong.
Yeah.
There's things that can go wrong still.
Yeah.
Yeah.
Yeah. I see, you see a lot of short, minor changes in the market, like co-living becoming very popular. That's evidently going to happen here. It happened in Europe. It's going to happen here. Right?
What's that?
Like co-living.
Co-living. Okay. Yeah.
Unit townhomes where people share a kitchen and a living space, and the rent is lower because of it. And you're going to see a lot of that kind of stuff here. But it doesn't solve the big picture problem. It barely scratches the surface, right? And I think, that's what I tell investors overwhelmingly is like, we show them all kinds of slides. We show them the risks, we show them the rewards, we show them past returns, and here's what happens when projects cancel. Here's what you have to look out for. Here's what your closing costs will actually be, which is a lot larger than people are anticipating. And we show them kind of the good and bad of pre-construction investing. But we show them mortgage rate projections and all that kind of stuff. But the overwhelming story that I try to explain to everyone is if you take only one thing away from the presentation, it is supply and demand. That's the problem here in Toronto. And it looks like, barring some massive change to the way Canada operates, it's going to remain a problem. And that's why you invest in real estate in Toronto, is because you won't beat the S&P. If you're leveraged 20% down, historically speaking, Toronto smashes the S&P. Because of the leverage aspect, obviously, and it's real estate, so you can borrow against it. There's a million things you can do.
It's pretty liquid right now too, actually, which is crazy. It was never considered a liquid asset. I mean, you could sell a house right now and close in 30 days, right? Easily.
Yeah. Yeah. And I think we're seeing a bit of a summer slowdown right now. Like people are focused on the nice weather, things are open. So I think or Scott Ingram put out the months of inventory for the resale condo market, and it's like 1.6 now, which is up from 1.1 6 weeks ago or so. But it's like it's important to remember, like that's still
Can
in
you
an
feel
aggressive
that?
seller's market.
Can you feel that difference?
Not really.
I've seen some condos sitting. Yeah, I've seen some condo units resale sitting.
You know what I've
That
noticed?
a month ago I wasn't.
Not in the condo market, but what I've noticed a lot is like houses coming up, getting terminated, and coming up again at like a higher price, or the exact inverse of that, coming out really high, terminating, and coming up low, and then getting sold for that original number.
I've seen so many. It's crazy. Up,
crazy
down,
what's
up,
going
down,
on.
and then terminated listing.
That's a beautiful thing right now about the pre-construction market is there's supply. You can get a unit. The price, you know what the price is when you're making your offer. You know, you know things. Right now in the resale market, you don't know the price. You don't know where it's going to go. You don't know how much you have left for renovations. You have no idea. And some asshole is going to outbid you for no good reason 99% of the time.
Mm-hmm. Yeah, I mean, it's always interesting hearing the stories where it's like, I think TRB, David Fleming put out that article where he sold a listing and, he got 7 or 8 offers and 3 of them were within $5,000 of each other at what he thought the condo was going to sell for, call it 600 or whatever. And then one offer was 80,000 above those or something like that. I forget the exact numbers. And it's just like, it's one fed up buyer who's lost out on multiple offers who just says, you know what, forget what fair market is, forget what the comps are. I'm just going to offer my maximum personal budget because I'm tired of this. I just want to secure a condo. And I mean, if you look out over a 10-year horizon, that person's going to do just fine. They may have overpaid by 70 today, but eventually that's going to be all right. They probably set a new precedent that future listings in that particular building, they're looking at that benchmark, right? It's just, resale's an interesting animal right now. And what's most interesting to me is in the past month or so, just the resale, like entry luxury market for condos is just absolutely on fire.
What price range is that? Like we say entry luxury. What is that?
1 to 2.5 type.
Okay.
Yeah.
On fire because there's no supply.
Yeah, there's very little supply and there's a lot of people looking at that market right now. There was a listing that came out, the penthouse at 47 Lower River. My clients had bought a year ago now a $1.1 million lower penthouse unit at 47 Lower River, and this one listed for 1.499, and it's a 1,700 square foot unit. With some outdoor space in the same building. And they said, let's go see that. I think we want to upgrade to that and rent out our current unit. I was like, all right. It had listed 12 hours ago. So I booked the showing for the next morning. And then our showing got canceled because it had sold. And so it sold in 24 hours, which is atypical, obviously, for almost $2 million units. You're seeing that happen across the city.
That seemed like a good price point, though, for that unit.
Well, I'm sure I would bet it sold for more, but yeah.
That's the thing. The price.
Well, do you hold offers or do you not hold offers? Right? It's kind of like when markets are changing, you don't know, right? Am I selling it too soon or what? Right?
A lot of people.
Do I take the bully offer? Or do I not take the bully offer?
Yeah, a lot of people are telling you, like, while you're walking through the showing, like, I suggest you make a bully offer. And that makes me think that, like, they're not sure what's going to happen on offer night now. Because people are.
It's the first property you've seen. Make a bully offer. Just go in.
I think the smart move would to be, I have one ready. Here, just sign. It's already filled out with your name.
Be a bully. Make sure you get the house.
Be a bully. How else do you do it? What other strategies are there these days? Well, Jordan doesn't really dabble in the resale that much, do you?
No, we do. So not me personally, but on my team. We have a number of guys who do a ton of resale.
So are there any interesting strategies to use these days? Like it's hard to stand out in a market where, I compare it to, you see in the movies, the chain link fence with all the zombies like trying to get through. And there's like one guy on his own with a bat. Like that's the listing. right? And the zombies are all the people looking to buy houses right now, just waiting for that like notification to come up that there's a new listing in the area that they want to live in.
And they'll say and do anything to get inside. They're like, oh
Anything.
yeah, our budget's way more. Oh yeah, we love that house. We've been waiting for that house. And then they see it, and it's like, hey, can I get some feedback from your showing? No reply.
No, the agents are like,
Yeah.
well, yeah, it
Like,
says
what do you- I thought you said you're
1.4.
really interested.
It says 1.4, but we're expecting at least 1.6. So if you're not planning on offering 1.6, don't even waste my time and book a showing. It's like,
Yeah.
Yeah,
whoa,
that's a bad agent.
must be nice to have a listing these days.
Yeah, for sure. I mean, having listings right now, being a listing broker right now is a license to print money. But yeah, no, it's, I mean, there's a lot of different strategies. People do it a lot of different ways. I think one thing a lot of people do wrong is they bully offer, but they bully offer conservatively, like less than somebody would probably get on offer night. And it's like, if you're submitting a bully offer, it has to be attractive enough to
Yeah, I
make them
better
not
take
go-
this.
Persuade them to
Yeah.
abandon your strategy. Yeah.
Bird in the
Exactly.
hand is better than two in the bush. Let's go.
Make them
Exactly.
think it's an emotional decision. The seller goes, oh my gosh, that's the price. That's more than I thought I was going to get. It's the closing date I want. Those buyers are perfect. They may not be here next Tuesday. We better look at this.
Yeah, they may have
Yeah.
bought something already by Tuesday. This market's bananas. But they don't
Imagine if
care.
developers had that power. If developers had that sway where they could just put up a unit and just say, okay, it's 684 square feet. You know, we're asking $1. Let us know what you think, and just let people come
That's
in.
what I
They would
was
love that.
thinking. I was driving
They would love
around this
that.
morning going, why doesn't it, like, why is it different in pre-construction? Why is it a completely different sales method? Why couldn't the market say, hey, like, this is what I want to pay for this thing. Do you want to take that? No? All right. Like, maybe this guy will.
I think it's just because you're bulk selling so many units at once.
But there's just as much demand, right?
But he's true. He's right though when he's saying you've got options. So I'll get that one. I'll get that one. Right. And that's when it's a resale. It's like, this is the only house on the court with the ravine and the blue shutters. And it's like, do you want it? How much are you willing to pay? So it's a little bit more of a scarcity.
I would imagine that some builders don't know it, but they're leaving money on the table with their pricing because people would pay more. Look, $5 a square foot more, $3 a square foot more on some of these buildings. You know how much bottom line profit that just adds?
Yeah, no, it makes a huge difference when you're talking about the entire building as a whole.
Yeah.
Just pushing up the average cost.
So it seems crazy to me that there isn't a more universal system. You know what also seems crazy to me? That 1 million people can bid on a house. It can go to God knows where, and the seller could say, you know what? I changed my mind. You know what? We didn't quite get there. It should be like, you list it, you better sell it, you better sell that thing.
Yeah, I mean, it's interesting, right? I know a lot of buyers who are obviously fed up in this market. I also know, like, we've had clients before who routinely, generally speaking, what I tell agents who are doing multiples, right? They're working with a buyer in an entry level price point, either in detached or in condos, is oftentimes if this isn't a referral, this isn't someone who trusts you yet. Let's say it's an online lead that you've converted into showings. You have to earn their trust, and generally speaking, if they're first time buyers, like, they need to see it to believe it. Usually they have to lose one before they get serious. You have to kind of, tell them where you think it's going to sell. This condo is listed $599, it's probably going to sell $725, whatever. Let's offer, oftentimes clients will be like, it's their first time out, they want to offer, like, ask for maybe 10K more than ask. You gotta let them do it, man. You gotta let them lose once and see that it sells for the price that you suggested it would sell for before they'll trust you to offer way over ask on the next one.
Oh, yeah. And guess what? The next one will be a little more than that one you just lost, by the way.
100%. But you got to have patience, and you can't push people because, I mean, they're going to have to learn the hard way. They almost always do. And it's just it's the way of the game. Like, right now, being a buying agent is not a whole lot of fun unless your buyers are at a price point where, bidding wars are not all that prevalent.
That's got to be a fairly high number.
Yeah, and even still, it becomes
how much
you're dealing
competition?
with sellers who sometimes are overpriced by $1 million, So you're like,
Right.
you know, you've got a great buyer, and they're like, I can afford $3 million house, just find me one. But all the $3 million houses are listed for 4 million, and you're like, oh,
Yeah, but
doesn't
you
make
know what?
sense.
Like what you could get for X 6 months ago does not get you anywhere close to that now. And a year
Yeah,
ago, forget about it. But 6 months, it's like a big difference what you could have bought versus
Mhm.
what you can get right now for the same bread.
Yeah,
yeah,
I mean, I think that's part of the reason we're seeing so much activity in the entry kind of luxury condo market too, is just because freehold has, freehold prices have risen so sharply that all of a sudden some of these condos, these $1, $2 million condos, are not appreciating or haven't appreciated very much in the last year. So they're such a good deal. Comparatively, they suddenly look like such a good deal. You get a really nice condo in that 1.5 to 2.5 range, right?
are any of your investors worried about the rental market still, or is that now a thing of the past where everyone's like, okay, this market's coming back, we're not concerned about it anymore?
Did we
I think a
absorb
lot
all
of
the
people.
Airbnb?
Yeah. Sorry, guys. My agents just rolled in. You sent that? Thanks. Working on a Sunday. Nice to see you.
So we absorbed the Airbnb, and we're saying that we feel comfortable with the rental market now, or
I
we
want to hear
don't.
what Jordan's
That's what I'm
investors
asking.
are thinking.
Yeah.
Yeah.
It's getting a lot better. Like, what are we under now? 9,000 condos listed for lease. So it's getting a lot better now. But it's still elevated. Like typical is under 6,000, I think. So we're still,
Okay.
50% above where we should be. And depending on where you are, 100, 200, $300 a month less.
Are those
But it's
concentrated in certain areas?
definitely, and in certain buildings as well. Not even just certain areas, certain buildings, because they have a lot of that inventory. It's, if you're in some luxury boutique building and there's only 2 units for lease, you're probably not seeing as much of a decline in rent as some super high rise, like grid condos where their HVAC's not even working and they got 21 bedrooms for lease, right? Obviously, there are different buildings get different rental rates. But I know we just had a client lease a unit out at Sherway, leased really quickly in like a week for roughly the same as what it would have leased for pre-COVID. So
That's
it
awesome.
depends on where you
Yeah.
are.
So,
What about
so
your presentation? Just because we're at the end of the show here, we'll wrap it up soon. Your presentation, forecasting 4 years from now, how are you treating that on the return side? Because obviously you're trying to project future rents, right, with your investors.
So our pro forma, we haven't changed it. Pre-COVID, post-COVID, it built in 3% rental inflation yearly and 6% price appreciation yearly. Try to keep it conservative. Do I think the market's going to do better than that? Of course, because it has ground to make up. If we're 20% depressed, we're going to do better than 3% a year over the next little bit. Second, the borders open and foreign students come back in, that rental market, the rental inventory gets eaten up quickly, and probably the price of rents will rise almost as sharply as they declined. Um, It'll kind of make people's heads spin, I think. And then from a price standpoint, I think we'll do better than 6% a year because the last decade we've been at 7.9 to 8.1% per year. I think there's a good bullish case. Like obviously I'm a condo bull, and I think there's a great reason why we'll outperform 6% per year. But those are the numbers we put on our pro forma because I hate to be too bullish and over promise and under deliver type of thing.
Yeah,
And I just think
makes
some of these
sense.
cash flows that other brokers send out, where they've got like 7% rental inflation and 10% price growth, I think it's like,
No.
those are just maybe in the best conditions in the world. But I think if you're basing your returns on 6% per year, and your rental increases at 3%, you're being conservative enough. And if the numbers make sense for you with those numbers, then you should go ahead with the purchase.
Awesome.
how much equity makes something like that cash flow these days? Like what percentage do you have to have down to actually make money every month?
Depends on. So some of the pre-construction units we're selling, cash flow assuming 3% rental inflation from current rates. Very few, or neutral. More are neutral than cash flow. CIBC, Benjamin Tal and Sean Hildebrand put out a great report that showed 37% of condos that closed in 2020 were in a negative cash flow position, and showed that the average appreciation, the average equity gain over the span of them purchasing, which presumably if they close on a pre-construction unit in 2020, I'm assuming they bought around 2015, most of them were up about 180,000 on average. So I think
You're
those are
doing
good
okay.
numbers. Yeah, all right.
Where can our listeners reach you? Where can they find you, Jordan?
YouTube pre-condo, yeah, YouTube pre-condo.
And yes, so thank you,
Awesome.
Mr. Scrinko. We have a busy day scheduled. Mr. Butler is showing lots of houses today. I'm sure you're super busy. I don't have too much going on. I'm just going to edit this video all day. And thank you once again for joining us. Wonderful conversation, sir. Very insightful. Thank you for your help. I feel like I got a good pulse on the market today.
Big
I hope so.
Yeah, you guys are pretty smart. Thanks a lot.